Okay, now this isn't just with regards to oil. This is with regards to any fundamentals. It could be central bank, it could be supply demand, it could be company earnings. All right, they're all one and the same thing, and the markets respond in one and the same way. All right, so the way we look at this is obviously the example comes from the 22nd of April, which is yesterday, Monday, Easter Monday as well, and what we have to do is we first have to start off by looking at the positioning before. So you always want to understand what before the news announcement. Okay, this is assuming we haven't sort of we were in a position where we knew that the market's positioning, and we've come in on Monday and suddenly this news has come out. Okay, now obviously this news did hit the markets very, very early in European time. As far as I understand, it was around 2 a.m. in the morning, or sort of late Sunday night. So it wasn't one that many traders would have seen. Okay, however, you can still profit from it even if you missed the initial headline, and that's what we're going to go through now. Okay, so the first thing to understand is the positioning before. All right, very simply put, the more positioning there is in the opposite direction to the fundamentals, the bigger the move will be. Okay, let's take a nice example. Let's say for all intents and purposes, right now in the euro dollar, the market is extremely short. Okay, there's net record shorts as per the CFTC reports. Let's say it all of a sudden came out, Mario Draghi comes out and says, you know what, actually they're gonna stop reinvesting their bonds. Okay, so they're gonna turn from excessively dovish to excessively hawkish. Okay, now that move will move a lot. Okay, if all things being equal, it'll move a lot initially. However, the continuation of that move is very much dependent on the positioning. In other words, if the market is extremely short, the upside reaction is going to be far more aggressive than if the market wasn't aggressively short. And that's important to understand. That's why we always assess the positioning. Okay, I will show you what this positioning looks like in oil, an example, in a minute. The second thing we're looking for then is the initiative and the price response. Okay, so news comes out, we get an initiative move, we get the buying coming into the market, but what does the price response do? Okay, and this is particularly important because what very often happens sometimes on fundamentals is you think it's big, you have an assumption that it's big, and it could be big, but we don't know what the market's positioning is. We don't know how much of the news is actually new news. Okay, and that's important. Don't ever assume that you're first to hear the news. All right, there's a lot of very powerful people that will receive news, well in advance of what we do receive it as day traders. So always assume that you're last to the information, and let the price response guide you in terms of how new that news is or how relevant that news is to the market. Okay, and then also the very, very important, the ability of a market to trend. This is very, very crucial, and we'll look at this on the footprint as well. And this is just simply, if this is significant news, if there's really something substantial in the market, there shouldn't be much liquidity being provided on the opposite side. Okay, so it's important to assess how is the liquidity being provided, because if it's new news, there won't be much liquidity and the price will be very directional. If it's not new news, there will be a lot of liquidity and the potential for reversal increases. Okay, so it's almost like the more liquidity provided, the more potential there is for a reversal. The less liquidity, the less likely a reversal. Okay, so those are three factors we're going to look at now in an example. And I've got this nice little arrow here so I can annotate, but in essence what we're trying to show you is that the market's ability to trend, okay, is crucial to interpret. Right? If a market sort of moves in a very one-directional, lack of pullback type trend, okay, that shows and illustrates the lack of liquidity. It shows the lack of two-way trade, and that tells us that it's very, very much a one-directional fundamental. In other words, everyone is getting onto the same trade. Okay, if however we have something like this where we have a lot of overlap, maybe even a little pullback and then a bit more, right, that's telling us something very significant about the market, and it's something you have to be aware of, simply because if we take out that lower point, right, the potential for reversal is very much on. Okay, so that's what we're going to look at now. Now, before we start off that, all right, we first spoke about positioning. Okay, so it's important to actually just take a look at the weekly oil chart. Now, not many people know this, but for seven and a half weeks now, we've actually had, we haven't had a single red week. Okay, so for almost 2 months, oil hasn't had a down week. Now, obviously warranted, the last 2 weeks we've started to stall a little bit. We started to see a little bit of sideways trade, and we actually have started to see sellers enter the market. I'm going to show you what that looks like in a minute. But the crux of it is this trend that sort of started on Boxing Day last year. It just doesn't seem to be pausing at the moment. And yeah, I mean, in terms of resistance, it's very difficult to find any kind of resistance. And so long as the market keeps printing these green candles, right, unfortunately, it does mean that the buyers are very much in control at this point in time with regards to the price action. Okay, so let's look at that footprint now, because it does become interesting when we can actually start to see a few of the things I've spoken about. So the first thing is positioning. Okay, now the best way to look at positioning is simply just get up a daily footprint. Okay, get your daily footprint up and start to have a look at, one, the volume being traded each day, and two, the delta plus the price change. Okay, so we can see volume at the top, delta, and price change on the left side. All right, now what we're looking for is we're looking for how much buying is coming into the market, how much effort is being put in by the buyers, and ultimately how much are they getting rewarded in terms of price response. Okay, so we're going to start on the 8th of April. We can see nice full-bodied green candle. Okay, really aggressive day, good volumes, nice delta. Okay, good buying impulse. So we put a line there, nice bit of initiative. Okay, the next day the market attempts, goes bid. Okay, but sellers re-enter the market effectively. So the next day we actually saw quite a good reaction from the sellers, right? Buyers attempted, sellers responded. Okay, and prices drifted off, but we closed doji. So two-way trade. So we can see buyers and sellers have now entered at this point, 64.79. Next day, contracting range. Okay, buyers and sellers both have an attempt again. Volumes slightly increased. Okay. The following day, however, biggest volume of the 4 days, see a sell-off, and the sellers take control. So very much buyers to control 63.20, sellers to control 64.80. Right? There's your support, there's your resistance. Okay, the support and resistance is not lines. It's simply, where do your buyers enter, where do they take control from? Okay, and where do your sellers enter, and where do they take control from? Right, very next day, again, we see an attempt from the buyers, but this time notice what happens. Buyers attempt and very heavily get rejected. We close unchanged on the day. Big pickup in volume. Okay, so very interestingly, we had a very big pickup in the volume, but also a positive delta, but price finished unchanged. And that kind of led us to the next day, which is that down move, simply because it's very unusual to see all that effort from buyers, all that buying from buyers, but price was unchanged. Okay, and that's how we got the follow through to the downside the next day. But again, notice what happens. Price sells off, we test that 63.20, that same point the buyers bought on the 8th, and the market very aggressively rebounds. Okay. Very next day, the buyers step in and take control again. So again, nice to find support, nice to find resistance. And we sat inside this range, for a good 2 weeks now. All right. Now, market came back up to that 64.79. Notice what happened again. Very severe rejection. So we saw not just once, but twice, very aggressive selling from 64.80, and we saw from 63.20, not just once, but twice, very aggressive buying. Okay, and there's your range. There's your established range. Now, it's established not because I say so, but we can see buyers aggressive at the lows, and we can see sellers aggressive at the highs. Okay, initiative being taken at 63.20 and at 64.80. Okay, so now the question begs is, what is the positioning? What was the positioning before this big day, before this comment came out yesterday? Okay, well, the simple answer is the positioning is quite neutral at this point in time. Now, again, yes, we can have discussions about positioning and what time frame, and the weekly chart's green for 7 weeks in a row, so we can assume that positioning is bullish or whatever you want to call it. But when we talk positioning, we always want to talk in terms of the near term. We want to talk about what's happening in the current range, okay? Because it's the current range that's going to give momentum and volatility. Right, and the current range since the beginning of April is that we've pretty much settled in the 63.20 to 64.80. So very much buyers off the low, sellers off the high. So a very neutral positioning. Okay, there's a big battle going on here, so quite a neutral positioning. Right, and all of a sudden we can see that that news comes in 64.07 off the open, and market rallies a good 2 points. Okay, so there's our initiative day. Notice the delta 6,500. The biggest in pretty much the entire range, and double the volume, so double the sort of average volume we did over the last couple of days. Okay, so it's significant. Okay, that's the next part of the question, which is did buyers get rewarded for the response? Okay, and we can see that. We see the response with a positive delta, we see the response with the volume, and we see the reward. Okay, so the price change tells us that buyers got rewarded for being aggressive. Okay, so at this point in time, where are we? Well, if we've missed this move, which most of us have, I'd like to think almost anyone I know has missed this move. But where we are now is in a market that we've broken 64.80. We're above 64.80. So long as we stay above 64.80, this market's going to keep moving up. Okay, so we've got to be looking to play with the trend now, stay long with the fundamental news. Now, the important thing is the bigger the news, the shallower the pullback. Okay, think about that very carefully. The bigger the news, the shallower the pullback. In other words, come back to the example of euro-dollar. If Mario Draghi came out and said to us all of a sudden they're going to stop reinvesting bond purchases, effectively that's extremely big news. So we'd expect a very shallow pullback and go. And we can see that very early on. You know, this is quite early on Tuesday morning, but we can see how shallow that pullback has been. We've pretty much opened where we closed and gone straight but up. Okay, so the market is taking this fundamental news very, very aggressively. More importantly, look at the volume, guys. Okay, a good amount of sort of volume in the overnight session, and we can see that market do the delta as well. They are buying it in the Asian session. Okay, so there was a lot of buying in Asia. People are hopping onto this news, and price is responding at the moment. So it's big news. That's the key takeaway from it. All right, now going forward, we have pretty much two very important points as to how we trade this going forward with the footprint. Okay, in simple terms, the 64.80 now is crucial support for the market. Why? Not because I say so, but because that's where the sellers responded. Okay, if we get back below that 64.80, it tells us a lot about the fundamental, i.e. that it's maybe not as big as we think, or maybe that there were people that knew about this news already. Okay, and that's why it's so important not to just think you know when something is big, but rather let the market tell you when something's big. Okay, so that's the key. 64.80 back below there, and oil should very quickly be testing 63.20. And then the last sort of point is that 64.07. Okay, that would be if we get back below 64.07. You know, you can pretty much, I'd like to say with strong conviction, you can pretty much, think that we do have some form of a top in the market. So 64.07, you should start to see that bullish positioning now, that bullish initiative being unwound, and we should then test 63.20, a break of 63.20, and oil does start to form a top. And that's the key takeaway, guys. We're neutral, we've broken out, we've got initiative, we now got some bullish market positioning, the market showing us that bullishness. We see this continuation, and until we get back below 64.80, we don't really want to be entertaining shorts in this market, simply because we just don't know how far it can go. Okay, we don't know how big this fundamental is, and we're not going to start guessing.